The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful January 2nd and a brand new year here at TFNN, the headquarters for technical trading and investing. So we had a little bit of fiscal cliff issues out here. Everybody got to sing Auld Lang Syne. I never knew what that actually referred to. I just thought it was a creepy song you had to sing once a year. Actually, I looked it up on Wikipedia. Apparently, it's some kind of old poem that no one remembers anymore, and it got stuck in the song, and that's it. And it's Auld Lang Syne, S-Y-N-E. It's either Scottish or Irish or something. All I know is a lot of people look like Otis the Drunk on that day that you sing it, and hopefully you checked yourself in behind the Gray Bar Hotel if you had drunk too much instead of going out there on the roads. Hope everybody had a safe and wonderful New Year's evening and day. So what do we have going on here? Got a little bit of a bounce. We're going to have to check this out here during the show. February gold rose $12.20 to $16.88 on the news, which is kind of probably the most interesting thing to me out here today. Had a lot of shorts in the market, me being one of them. Still staying short. We're going to look for a signal up here, 1448 on the S&P cash is probably the magic number. We're staying just above that. A lot of volume, 2.9 billion shares already. The question is this going to be the blow-off top everybody has been waiting for? S&P up about 25 points at the moment. We went up to a high of 1457.53. And we'll have to check that out. But, closing on a 3 billion shares is not a bad day. We need about 5.5 billion to get through these highs. And so we're going to be light on volume. Some people would say we're just not going to have that kind of volume ever again. That is one argument. But have a lot of volume here, but very little volatility intraday. It looks like everybody kind of just steps back in at about 1450, trying to hold this thing above 1448. I suspect that the high-frequency traders ran a lot of the shorts above that early this morning, getting up to 1457, but we'll have to see how that comes on. Of course, the fiscal cliff, we can all raise our heads and say we're glad that the fiscal cliff's over, except it's not. We're just going on to another probably crisis here over the next few weeks and months as we fight over just how much spending is correct for the United States government. One thing that we do know is that taxes went up yesterday on 78% of all people in the United States. If you don't pay any, it doesn't matter. But if you were good enough to make it to that level, well, you'd have to pay for it. Really did matter. But the old fiscal cliffs of Dover, probably not quite over just yet, and we'll find out. Still have a perfect storm of bad news in front of us that could blow up in our faces any minute. Iran, Israel, the river closings, which I haven't heard of yet today. Mississippi River was supposed to be closed either today or tomorrow. Couldn't find anything or any announcements at all in it. We still have our debt limit pretty much to argue about. China has about $2 trillion in these wealth funds that have basically no accounting, if at all. Some people say that they have a better system, that is, that if you're found committing fraud, they just chop your head off. The question is whether or not people think that they can still get away with it. And I think that people, that would be the argument, wouldn't it? People say that capital punishment doesn't work, but they say that in China it's a better deal because they do have capital punishment, even for things like fraud. So I wonder which one it is. We'll have to find out. Debt downgrades probably going to be factored in. I would imagine that we have a 90% chance of our debt being downgraded over the next 2 to 4 weeks. They were looking for $4.5 trillion. We've got about $600 billion in cuts that are totally phony and are so nebulous that basically there's nothing. So we're probably, of the $4 trillion that the rating agencies wanted, we're probably short $4 trillion. And of course, we still have kind of a little war going on between the United States and China on whether or not they're going to actually put enough information out that we can list Chinese stocks on the New York and NASDAQ Stock Exchange. It could get ugly here soon. Coming up, there's not a whole lot on the radar for me, except Consumer Electronics Show. That's January 8th through the 11th. I started going there, 84, 85, somewhere around in there, to Las Vegas at the Consumer Electronics Show. It used to always be on the day after New Year's, so I used to be climbing on that plane New Year's Day Eve, flying out to Las Vegas. Always stayed in the Bali and went right across and ate dinner at Batista's Hole in the Wall. If you've ever been to Las Vegas, I suspect it's still there. I haven't been in a little while. The internet has kind of made it so that you really don't need a big issue or big deal about going anymore. They have their own CES TV online where you can look at a lot of the new products. Not a big deal, but every once in a while it's kind of neat to go and put your hands on things. But tell you the truth, people just don't wait for trade shows anymore. Trade shows and the trying to get to the trade shows made it fairly regular that you had to have a product ready to go for that trade show season, whether it was Consumer Electronics Show or Comdex, National Association of Broadcasters. There were a lot of them, security shows. If you didn't have your product ready to go and show, then a lot of times you were either 6 months or maybe even another 12 months away from being able to make a big to-do about what you had. Those days are kind of over. Mostly what we're going to be looking at Consumer Electronics Show is probably a lot of Samsung stuff, new LED technology, which is organic LED technology, supposed to be much better and brighter for displays. So we'll continue to look at that, but not a big deal. Zipcar is basically going to let Avis buy them out for about $500 million, their recent IPO. And what did they do? They just pretty much you have a car in a parking spot somewhere in town. You've got a little like credit card. You schedule the car. It's got its own little cellular modem. You swipe your card in the car and get your keys and get to drive it anywhere you want. Kind of a by the hour thing. So you can get a car for, like in New York or something, for about $10 an hour when you need it. And then you've actually got a parking spot, which is probably more important for cars in New York or any big city, is finding a place to park the thing. So kind of a pay-as-you-go, pay-as-you-need-it thing. Probably maybe a good option, especially in bigger cities. Smaller cities, probably not such a good option, but we'll be seeing them out here. And we've got one last thing, and then we're going to get into our first caller today. I want you to be well aware of this pattern, and that is the asymmetrical triangle. Hopefully you're watching on Tiger TV right now, you see a stock basically have higher lows and lower and higher lows. And it continues to go on. If it makes it to the apex and then breaks out, about 75% of the time, that's the false breakout side. Right now, we're seeing a lot of stocks do that, so we're going to continue watching this and keep on taking a look at it. But we'll find out. Anyway, we're going to go to Marty in Worcester. How you doing, Marty?
Pretty well. How are you, sir?
Another day in paradise down here in Florida.
Excellent. Another day, another dollar.
Yep.
Okay, well, a couple things. The first one is I think I know the derivation of Old Lang Syne, of the phrase. And I think that kind of literally it means old long since. It's idiomatic, and it translates better into old times gone by. You know, times gone by, old long since. And so, you know, old medieval idiomatic Scottish dialect from something early.
Well,
Don't you
think that we have a song that makes a lot more sense, or we could come up with one instead of one that seems actually kind of creepy to me?
Well, probably.
I think this song ran out of gas about 30 years ago.
Well, I think I Googled it recently. I didn't find the old long since part. I take that because I majored in English, but and it reminds me a little bit of Middle English.
I think it goes back to some Scottish or Irish thing. I looked it up on Wikipedia, and it's got the Old Lang Syne is some kind of poem, and it's, you know, it sounds like you got marbles in your mouth when you say it. So I thought, really, I think we can do better now.
Well, we could actually. I did read that it was in a movie or something, and it just got popular all of a sudden in this century.
Yeah.
I mean, the previous one, you know.
The poem was old. The song started in like 1910 or 1920 or something.
Yeah, I read something like that recently, yeah. But, but by now it's become itself for old time's sake.
Yeah. I don't know. It's a creepy song. It's like the one that there's some guy that sings, and they play it right around Christmas. I call it the suicide song. And Dan Fogelberg, you knew it too, don't you? I figured that there's people putting their heads in ovens every time that song is played, because the song starts and he goes, and the snow turned into rain. And I thought I could just hear the guns going off and people putting their heads in an oven. Oh, the most depressing song ever.
Well, I don't know. I think it sounds pretty good on bagpipes.
What, this Dan Fogelberg song?
No, the Old Lang Syne.
No. Yeah, it's just a little creepy. It's not depressing as much as this other Dan Fogelberg song. I can't remember the name of it.
Oh, I don't know what one that would be.
Oh, my engineer knew it instantly, because I think everybody knows it. For some reason, they seem to play it. So what are you calling in today about?
Okay, well, on Triple D, DDD, the PE on it is crazy.
Yep.
You know, am I ever going to get a chance, do you think, to get it at a fair price?
Yeah, I think it's coming back down to probably 35, 37. You want to hang on through the break?
Sure.
Okay.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Yes, two songs I want banned from radio. And the one is Dan Fogelberg's song, The Same Old Lang Syne. And the song that, I'm trying to remember the guy's name now, Harry Chapman, about his taxi, picking up his girlfriend, finding out she's married, real rich. He's sitting in a pathetic loser driving a taxi around, smoking dope all the time. So both those songs are just, horrible, horrible karma songs. Normally it's well, anyway, thanks for Steve, our producer, who knew the name of that song. Boy, they're horrible. Anyway, they're horrible. We're talking with Marty in Worcester. He wants to buy DDD, but this thing's gotten way ahead of itself. A lot of hype. Still there, Marty? Let's see. Is he there?
Yeah.
Oh, there he
is.
is.
Here.
Okay, we got him to wake up. So anyway, you want to get it? I mean, you could have a nice little signal if this thing opens up much lower tomorrow. You might have a nice little abandoned baby up here setting the top. But this thing's probably going to come back and fill these gaps. Are you watching on Tiger TV by chance?
Yes, I am, yep.
Okay, so you see those gaps that run from about 36 up to 39. And I think that those are probably where this thing ought to be trading. It's kind of taken off, gotten a life of its own, and probably mostly because a lot of people have distorted the tar out of it. And I think that a lot of the times these things get ahead of themselves because everybody sees what you see, which is the price earnings has gotten way ahead of the stock and where it should. I like the stock, and I think it's a great stock. You're just going to have to wait until everybody hates it again to probably get back in. And I think that time's probably coming. They've sold the sizzle a lot more than the steak, and unfortunately, I think that's actually going to be tougher for us. But probably over the next 2-3 years, it's a $100 stock, so I think it's going to be a good trader for you in the future. But just awful lofty out here, especially you get this kind of bizarre action like we got today, where the thing goes up almost to $60. But you get to open somewhere around 53 tomorrow. That thing could be awful scary on the way back down.
Yeah, I missed out on it way back at around 27, and I kept waiting for a retrace or a dip, and I never got it. So
I was originally in the newsletter on this thing in the 16s or 17s or something like that, averaged in. So when we sold it out, I'd already made it close to 100%. It was a little less than 100%, 75% or something. So now everybody's all excited about it when it's up here at $50 or something. Kind of drives me nuts. But I like your call that you want to wait for it to pull back so you can get back into this thing. I think that's the right thing to do. A lot of these stocks get way ahead of themselves and then pull back. Everything still looks good on this company. One of the things I dislike about it is the low end of the business that they really wanted to go after has not really picked up the way that they thought it should.
Right. Well,
the consumer side of the business.
Right.
But the business side's still doing well.
Well, I can understand that for sure. But I mean, when it comes to industry, talk about knocking out specialized parts and repairing old cars, and it's especially when all the manufacturing's moved to China. How do you get something made? And it's a fairly good thing. Now, I don't know if you get my Tech Insider newsletter, but I've been covering over the last, a week before last, a lot of other technologies that are like this. And so I may, I'd like to get this thing back in that 36 range, maybe as low as in the 32s. Really?
But I suspect there may be even some better opportunities in the same field. There are a lot more stocks or companies in this space that are going after some things that I never thought were going to be there to begin with. 3D printing of human tissues, printing in metal. There's a lot of stuff going on out there. I spent some time, it had to be 2 weeks ago, in the Tech Insider, where we were going through the big trade show in Germany that just got over, where they're absolutely producing things. And there was one company that I thought was very interesting because they are actually printing things in gold out of metal. So jewelers and stuff like that. There's a lot more to this business than 3D Systems is touching. So I think there's a lot more money to be made in this. I want to thank you for your call, Marty. When we get back, we're going to go start looking at some other stocks and try to catch up on what's going on in the markets. Thanks again, Marty.
Thank you.
Give me a call, 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And welcome back. Anyway, we're looking at the market. Still not a lot of movement. 3.16 billion shares so far in the consolidated tape. Again, I'd be looking for something like about 5 billion, 5.5 billion shares to say that we're really breaking out of this higher price range. I have to be very interesting to listen to Tom's show and see how we close today for just the floor traded volume on the NYSE and see how that comes in. But I'm suspecting he's probably looking for 1.3, 1.4 billion shares even on the floor traded, and I suspect that's going to be more like, I don't know, maybe 1 billion shares, 900 million, something like that. Again, it's interesting. You need to know that what's going on out there. A little discussion in the Den, and I saw some articles. I'm not exactly sure how they're figuring this out, but I saw one today that said 78% of the people, almost like that 4 out of 5 doctors kind of thing, 78% of the people that actually pay taxes, since a lot of people don't pay any taxes, at least federal or not, would probably be seeing over all the different tax hikes, would be seeing 4% higher tax rates this year. And I suspect why the article didn't go into it, there are higher things like carbon taxes for electricity. There's all kinds of new regulations coming in, and why you may not see those actually as hikes in taxes, you will be paying higher rates for things like electricity, for natural gas, higher internet taxes. There's a whole slew of these things that are insidiously small, but will add up over time. And I'm waiting for the first paycheck out here for a lot of people to start seeing how these things play out. You know, maybe they'll be a little late for them, but I'm wondering if this whole debt fiasco thing wasn't meant to get over just to see, you know, that, well, maybe Obama wins round one, but as people start seeing some of these things, especially if you get that 3.8% tax taken out for Obamacare, what is going to happen with those people? Are they going to wake up one day and decide that they've got a little bit of buyer's remorse out here? So we'll continue looking at that. Anyway, I wanted to go, it is, find some other stocks out here. Oh, didn't bring them actually. I forgot about that. Look at it. Some of these that we've been looking at the last few days. We've been talking about Walmart. Talked about it a little bit on Monday. This thing looked like it was about ready for a little bounce. Little is probably apropos, but pretty big stock out here. Popped to 69. A lot of these little stocks are kind of making signals out here that would be very bearish if we get a lower open tomorrow and continue to sell back and maybe go back to that 1420 area that this market seems to have liked for a while. You could get a lot of little abandoned babies out here in a lot of these that were out here testing the previous lows. But I want to see how some of these stocks reacted. We've been talking about Terex, TEX, another one of these things that's broken out. And again, the volume, why it's fairly good in the markets and the stocks themselves, going to be tough. Let's see what else. But, you know, Terex, this is what we really need to be watching is for those lower openings tomorrow. If you could get back open like 2850 or something, we're going to start seeing a lot of these little patterns where the market broke out and the volume was light and you've got these little abandoned babies up here. You know, if we get some kind of volume tomorrow and the market goes higher, maybe another 0.5%, maybe it fills the gap. But the thing to be concerned about here now is that you do gap back down and have these abandoned babies all over the marketplace. Could be very interesting. A lot of these stocks, and that's why I'm worried. I'm going to go back to some of these stocks we've been talking about the last few days. Skyworks Solutions, SWKS. This thing came into the previous low, didn't quite break it. So it's not a full test already, but came back and tested the previous November 5th low, $19.21, with just a shade under 10 million shares, with 12 million shares. So you've got a pretty good idea that this thing wants to come back in and test the previous lows one more time. You could make a case that the 17 million shares on the 2nd of November on Skyworks Solutions was the exhaustion move. So this thing's going to go sideways for a while. But got to watch a lot of these if you start getting the pullbacks before the end of the day. Take a look at a few more stocks here. And I just wanted to take a quick gander at some of the things I had out. Actually not doing too bad. I just, you know, I've got a couple of stocks up or 1.5%. And so not bad. Not going to stop out of most of them. Probably all of them, I imagine. Probably end up holding them at least one more day. But we'll see. Anyway, Skyworks Solutions, another one of these things that, you know, probably had some fairly high short interest. Everybody wants to buy these things. Of course, we've been looking for Apple to bounce. It has. It's kind of sold off a bit. 545. This thing's probably in a trading range for a while between that 505 mark and 550. It went to 555 today. But again, I think that a lot of this is high-frequency machines being unleashed on the market, at least in the first 20, 30 minutes of the day. Once that started to slow down, we started to see a lot of these stocks pull back just a little bit. Probably not a bad time to pull off some risk in these. In fact, we'll go through some of these other stocks. XM Satellite Radio, another one of these that's got a little gap out of here. If we get some bad news or something, probably not a short, being it's a $3 stock. But a lot of these have the same pattern, which is this little gap up. PPH Corporation, another one. This is a very nasty candle. If we get the same kind of close out here by the end of the day, PHH Corporation. We've been talking about this one banging at these highs. I did try to take a nice little run this morning, but this is probably one of the more nasty ones out here as far as just looking bad in the marketplace. But this, you get these nice little doji setups, which is doji, for those that don't do Japanese candlesticks, is an open somewhere around the close. These can be called inverted hammers because it looks like your little ball peen hammer up here, reversed. But again, two things you don't like to see. Nice little dojis up here on a breakout and light volume and a market that's news-driven. If it's a Momo market, a lot bigger deal. Magna International, another one of these in the car business that I've been thinking are about ready to crack. I'm not short it, but I think that a lot of the markets for cars has been driven by what are known as subprime loans, and they've come back with a fury over the last 4 to 6 months. I think a lot of that had to do with the election. Everybody wanted as many people working, and we'll talk about that in a bit. MGA is a symbol on this, but another one of these out here with a nice little inverted hammer up here, a nice little close back, another buck lower tomorrow or something. We'd leave you abandoned baby on some of these. And we've got some other ones here. Let's take a look. Nothing in that one. Some of these weren't, all bad. But we've got especially retail clothiers. They didn't have a great fall. The Gap GPS is a symbol on it. I always think that they should have given that GPS to somebody else that was actually in the global positioning system business. But the Gap GPS symbol on here took off with some decent volume. What you didn't like is they came out with news, and it was pretty horrific on the 4th of December. This thing's been bouncing around its last support level, which was that original breakout on, August 2nd. You could pretty much tell this was a long, short squeeze. They held us up as long as possible. Wasn't a whole lot to it, but a great operator. I was on the wrong side of the original short on this. I think I lost a buck or so on it. Finally, the chickens will come home to roost. But this thing is bouncing around these lows. Again, probably not the biggest mover out there. And FLIR Systems, we talked about this one. This is another one that could be setting up a nice little abandoned baby up here at these tops. They get more than 50% of their business from the government. If that sequester thing comes along, they would be unduly hit. Right now, I think everybody's just assuming they won't be. But of course, big in the defense area, I suspect they will continue to be under pressure for a while. Discovery Financial Services, probably need to talk about this a little bit. This thing had been coming back into the support area, which is a giant gap up that started on 9/27. So what is that? September 27th, and came down. Well, the volume was pretty strong back into that gap, but it did reverse. You had a couple of types pop up on light volume again, but one of the stronger out here. I wanted to look at BAC again today, see how it's doing. Another one of these that probably could find out with a gap back down. You need to be very wary of these stocks. because you could see another abandoned baby out here in this one. It'd be different if there's more volume in this thing, and maybe we see it at the end of the day. Maybe it's short covering, but it just doesn't look all that great to me so far. Let's see what else we have. The one that kind of makes me wonder if this market hasn't topped out also is AutoZone. Actually, this one's kind of come in and started to make its lows, but might be in a bit broader trading range up to about 390, which is the November 27th high. AZO is a symbol on this, but not bad looking. September 14th out here, 351.27 on 1.4 million shares. You had a kind of a decent volume down, but nothing approaching those kind of numbers. And what you have, 700,000, 400,000, 450,000, 200,000, 300,000 today. This thing's not really looking all that bad, and I suspect we're probably going to see auto sales pull back a bit at least. And the average age of a car on the road today is 11 years old. A lot of these cars are going to need parts. AutoZone still looks fairly good here, and one of our first caller was Marty talking about buying the pullback. This is certainly one that would have looked fairly decent. You had a fairly decent signal that this thing had topped. You had a high out here on October 8th with 600,000 shares. You got 670,000 shares on November 1st, but you got about half that. It closed below it. You had the valid sell signal on November 27th. This thing's been working itself lower since then. But, any of those days really come down on monstrous volume? The answer is no. But in that 350 range, 351, everything above that, not a bad-looking signal out here. The market does start to pull back. AutoZone may be one of those companies that does well in this movement. Wanted to look at some other stocks here real quick. Where's my Apple parts? I wanted to see ARMS Holdings. There we go. Another one up here. I've been waiting for this thing. I'd almost pull the trigger on this thing today. I'm suspecting that they're going to have kind of a tough year, probably following up in the shoes of AMD. They've had a nice run out here, but of course half their business is pretty much from Apple. Apple's already hired all their own engineers. Probably not a whole lot of reasons for ARMS Holdings, at least a lot of their business, not to go away in the future. Maybe not tomorrow, not next week, but I'd be watching ARM Holdings very close because you're going to probably find a lot of people, especially Samsung, Apple, Microsoft, a lot of the bigger companies involved in these, building specialized hardware that's better than they can buy from anybody else. In this space also, look for Intel, which was actually a fairly strong stock today out here, and that is, I'm thinking that they've got at least going after that tablet market in an intelligent way. They've pretty much been out of it. I've been writing in the Tech Insider what Intel's doing, but probably of the tech companies out here that are most likely to weather any downturn the best, I like Google right now and Intel. I think both of those companies have a fairly decent move. Been watching Google out here, and again, you would like to see a lot more volume in some of these tech stocks out here. Not the classic breakout island reversal out here, but I'm looking at a lot of these stocks. And, I'd be nervous until we get that open tomorrow. If we get any kind of downturn, we could have a lot of stocks out here. We're going to look at the rest of these stocks and at least the Apple supply chain and Apple itself when we come back. Give me a call, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And she said, how are you, Harry? I said, how are you, Sue? Through the too many miles.
If you cut me, do I not bleed? As soon as I say a song that he doesn't, that I can't stand, Steve has to go and find it. And just... it's like an ice pick to my ears. Oh, once you hear that song, you know you want to jump off a bridge. I think that's all you don't need to hear that song again. Ah, boy. He's such a nice guy. But I have a feeling he played that song so many times that maybe karma caught up to him. It's just so, I want nice, happy thoughts on Christmas and New Year's. I don't want all the horrible song of the cats in the cradle. Oh boy, just makes you want to never have any kids. That guy was a huge downer. I need somebody that's a little happier out there. Anyway, I had a question in the den from Mike, and that was, what do we look at IWM? We're probably, this chart's not right here, but we've got higher volume than the previous high. We haven't broken that high. We're about a nickel underneath it, the September 14th high out here. Again, I don't know if the volume up here is as important, because almost everybody, let me put it this way, a lot of people are in these ETFs, and they're long and short, and they're on the opposite side of it. I particularly think that the direction of the market has a lot more to do with individual stocks now than these ETFs. These ETFs are easy to run, both people in and out of the market, long and short. Market's been basically whipsawing a lot of people for the last 3 months in this up and down, and it's similar volume, still hadn't been a nickel. If this thing comes down, again, I wouldn't like it as a lot of these individual stocks have a much better setup. They have gone over the previous highs. There is much lighter volume, and it closed below it. So a lot of the volume's in these ETFs, not transferring that volume to the underlying stocks themselves, which means to me that this is, a lot of these ETFs have turned into more like a roulette business, a casino, and a lot less about the movement of the underlying stocks. I don't know how much you can move these things with high-frequency trading systems, but I think there's at least a decent amount in there. Narrow trading range, volume about the same. It would be different if we weren't out at these multi-year highs. So I'd say the question is, would it be a good short? I think you have to wait for the signal. You get a lower open tomorrow, and I think you go short, and today's high is probably your stop if you can get a close above it. But I think right here, all these, I'll be watching, making a list tonight of all these stocks out here. I'd probably want to short individual stocks more than I would want to do an ETF right here, again, for the reasons I stated. A lot of people on the wrong side of these ETFs. Easy to run those guys, much harder to move all the underlying stocks below it. I've been short for about 30 days now, and most of my stocks have held in very well, even though this market's been ratcheting up and down. I haven't tried to overtrade this market too much, and I think even if I'm wrong, probably going to lose a whole lot less money than sitting and trying to ratchet in and out of these. But a lower open tomorrow, and I think you're going to see a ton of stocks out here tonight and tomorrow night that are going to have those reversal patterns and island reversal patterns on lighter volume. TWM was another out here that I hadn't looked at. TWM. Again, a lot of this is going to be based on how this market closes out here. This thing moves up in the morning. I think it's the same thing. It's the opposite side of the trade. TWM is the ProShares Ultra Short Russell 2000. Watch how the market closes today. If you don't get a sign of strength into the close, you get a lower open tomorrow. I'd be looking at a lot of stocks, maybe not as many ETFs, but certainly you could look at that TWM too in the morning. But I'd wait for the confirmation. I wouldn't anticipate I would react in the morning. See you tomorrow.